on this. But our first question is actually from a Tim, so you should answer it, in Maine. And he said, how might the incoming Trump administration impact the outlook for the economy and for the markets? So maybe you can divide and conquer here.
Well, when I think about the economy, obviously it's so soon. We're just starting to see some of the nominees for, cabinet positions and beginning to understand, some of the early positions. I would say most of the speculation has been around three broad themes. One would be the potential for what I would call a lighter regulatory touch, and what that impact might be both on growth as well as the markets. Second, you hear a lot of people discussing the possibility of some sort of fiscal stimulus, the so-called infrastructure spending. But I think the third area, which is the one that probably gets the most attention because it potentially has the greatest impact on the economy, is the possibility, and the real possibility, really from a bipartisan perspective, of corporate tax reform. And there's a lot of discussion around that, and depending on how that were to evolve, that's certainly something that could impact long-term growth in the economy. Hard to say, whether it would have any real impact in 2017, but certainly 2018, 19, and beyond. As far as the markets, I think the markets are baking in some of these assumptions.
It has felt pretty good lately.
And Tim, I know you've talked a lot with your colleagues about this.
Yeah, Rebecca, Bill and I would both agree on this one, that the markets have gotten a bit ahead of themselves. In the sense, and when I say ahead of themselves, there's a lot of speculation, and we always caution people against speculation. The markets going into the election, Bill, we've talked, going in they were, well, some might argue they were fairly priced. Some would say they were expensive going to the election. Since then, you've had a run up 5-6%, a little bit more in some of the smaller cap markets. And the fundamentals of the market didn't change at all. The underlying fundamentals of these companies didn't change. Now, people are starting to speculate, what will this infrastructure spending mean? Less regulations, new small companies, new jobs, more consumption. Well, what will happen with corporate profits if they come back on shore? The problem is there isn't even Plan 1 in place yet. Right. So it's tough to react to. Like, how does it, if you're going to value a company and all the companies make up, say, the S&P 500 that you're valuing, well, how do you do a bottom-up analysis when you don't really know what the plan is yet? So that's where we're much more, don't react to what the market's doing right now. Often when you look at how a market's reacted from the election to the inauguration, it has nothing to do with what will happen afterwards. So it's a speculative period right now, and would caution people against reacting to it.
There's a really interesting statistic. At the end of the day, we think fundamentals drive markets. Over the long run. You can certainly have other elements in the short run change things on the margin. But if you look, we've actually taken a look all the way back to 1853 and looked at stock market returns. And whether it's a Democrat or a Republican president, it's been essentially the same market returns. So whatever your political persuasion, in the long run, the fundamentals of what's going on in companies is what drives stock prices more than who's, frankly, sitting in the White House.